Hello, everybody. Welcome to Tuesday. Thank you so much, Mr. Jeff Hammer. So, it's Tuesday. The market sucks. It's been a rough couple of days. And let's try and figure out exactly what's going on, because there are some interesting things happening behind the scenes, both good, bad, and ugly as well. Crypto market cap is about 2.6 trillion. Volume is high, 130 billion. The ETF volume still is kind of high too, and which is kind of rare, the Fidelity ETF volume is higher than Grayscale. Hoping we go to get a positive number tonight and tomorrow, but you'll find out first thing in the morning. Also, Bitcoin is at 65.5 as we speak. Ethereum 3,200. Fear and Greed 79 is weird. Fear and Greed is still very high, and realized cap. This is kind of crazy. Because of the capital inflows, the realized cap for Bitcoin is $540 billion. There is 79 billion, translated that back, 79 billion flowing into the space every single month. So we're definitely in a raging bull. Let's dig into all of the stuff we see. And we're going to start with the ugly news first. And disclaimer, this is, of course, not financial advice. And a shout out to Kev F. Finally got a space in Patreon today. Thank you for coming. Well done, Kev. They're usually good seats open this time of the month as well, early month. Anyway, let's start with the ugly news. First of all, unlocks. Crypto unlocks, some big ones this week. We've got Sui, $61 million, Gala, $13 million, HFT, not even sure what that is, and Aptos, $375 million. All these new coins that come out that don't have good tokenomics have a lot of dumpage. And that's one of the reasons why I don't like them. Well, there's many reasons, but that's one of them for sure. Now, another freak out today. A lot of nerves rattled by the market. A lot of weird stuff going on. But a wallet tagged as belonging to the US government moved 30,000 Bitcoin to a Coinbase wallet today. And at the current price, 65,000, that's about $2 billion worth of tokens. But we know in reality that's really a nothing burger. So let's talk to. I actually have a tweet here somewhere, and it's out of sequence. Let me find it. Yes, I found it. Hold on a second. This one here. Truth bomb, really the government sale from the Lady of Crypto. People panic selling because the government might sell $2 billion worth of Bitcoin. Bitcoin is a $1.3 trillion asset with over $10 billion in daily volume. No wonder these people stay broke. Again, everybody, we're buckled in. We have our bags packed. We know what's going on. These market fluctuations are still rattling people, and I don't know why. But I'll try to give you some comfort. Now, there's some other stuff going on too. By the way, everything's completely out of order. What did I do? Anyway, we'll come back to that later. Let's talk about debt, because we're still in the ugly news. Debt is going parabolic. I wish this was a stock. Bitcoin is the only thing going parabolic, but the US debt is the same from Econometrics. But when you see that chart, and what's crazy about it too, is normally debt explodes during recessionary times. We aren't even in a recession or a crisis. And the US government added $1.6 trillion over the last 2 weeks in debt. $1.6 trillion. You know how much you pay in taxes every year. How long would it take you to pay that off with interest? Near 5%. Crazy. Mind bonkers. And another article with a bit of a scary title. America, you have a debt problem, and it's going to kill you. That was kind of dark, but the truth is they pulled some copy from Bloomberg, and Bloomberg's economics department shows a 90% chance that the US debt path is unsustainable. There will be major financial instability ahead. I did warn you, I'd start with the ugly news first, everybody. But it's better to know what's coming down the pike than be unprepared. And that's why we Bitcoin. Another things we need to be prepared for is AI. Now, artists, creators, all those types of people, they are now very worried. Musicians are terrified that AI is going to replace them. Hundreds of musicians like Billie Eilish, Nicki Minaj, whoever that is, signed a letter urging AI developers to stop. Stop it. You're killing us. And the music industry is lobbying for legislation to protect artists from AI. You can't stop AI. The Screen Actors Guild tried that last year. Stop AI. We don't want AI writing scripts. AI is going to disrupt everything, and there's nothing we can do about it. Okay? It's going to disrupt what I do. I'm well aware, but I'm prepared. Embrace it or suffer the consequences. And in other kind of crazy news too, which is all tied to Bitcoin as well, inflation, money, Fed, debt. But breaking news here, oil prices have officially broken above $85 for the first time since October 2023, nearly 6 months ago. And prices are up 25%, and geopolitical tensions are escalating. And this also comes at a time when things like PPI, CPI, PC, inflation all posted year-over-year increases in Feb. And the question is, does the Fed control inflation? No, they do not. And this thing you're looking at here drives about 40% of all inflation because oil is in everything. The tires on your car are made from oil. If you drink a water bottle from plastic, which you shouldn't, it's made of oil. And oil powers everything. So just bear that in mind. Now we get out of the bad news. Now we get out of the ugly news. We're into the bad news. Less ugly. And let's look at Bitcoin and where we are so far. Monthly returns are pretty nasty. Bitcoin is down 8% so far in April. And we're only 2 days in. It's madness, but don't worry. Let me show you why. If you look at this chart carefully, you look at the average April returns for Bitcoin, 31.2%. And we're only 2 days in. It's actually, it's a small amount of time to really tell you where the month is going to go. But considering the halving is 17 days away, I think this 8% is not going to last very long. This is a dip worth buying, and that gives you good perspective. Now, I'm not saying history will repeat, but yeah, we're going higher in April for sure. And in terms of pre-halving dips, shout out to James Van Straten. We've now had 4 pre-halvings for Bitcoin. 2012, we had 2 dips, a 40% and a 23% right before the halving. In 2016, we had a 22% drawdown. In 2020, we had a 54% C19 scare, which is a great buying opportunity, by the way, and a 14% drawdown as well, 2. And so far, we've had 2. We've had a 17%er and a 10%er. Okay? Spot the pattern, ladies and gentlemen? Yes, you do. It's normal. And this definitely is repeating. But you'll notice as well that the drawdowns are less severe. Thank you so much to the Bluesk from Korea and Raincoin. And who else did I miss? Dr. Sauce and Solman and Anjo. Thank you all for coming. So this is a pattern. This is what happens before the halving. All right. Now, we covered that one already. Let's talk about one other thing as well, about lines from papers that get you all very excited, hot and bothered. They're designed to scare you. Be careful of headlines. So this says from Daniel Bernard in Unsplash, crypto trading volume has tumbled 75% from the March highs as frenzied activities eases off. And the slowdown raises questions about the sustainability of the lofty crypto market. Let's dig into that for a second. Let's look at Upbit trading volume. And here you can see, yes, it is down 75%. But that's off the spike of $15 billion in trading volume, which was an anomaly. If you look at the average trading volume in Korea, it's less than 2.5 billion. So, of course, if it shoots up to 15, it's going to mean revert, as we discovered this morning with Bitcoin price. That will mean revert too. And that's just how the markets work, everybody. So don't get too scared. And yeah, somebody said, China is awakening soon. And then they're going to come in and probably stack some more as well, like Mr. 100, who many people are concerned about that they're actually buying too much. And I will be working on a new analysis tonight. Somebody had a very good idea in the chat. So why don't you aggregate as part of your ETF analysis, add in Mr. 100. I thought that was a great idea. Who knows? I might. I'll try. Now, global liquidity is down a bit too from this chart from the Rational Root Bitcoin strategy platform. But I have other indicators that tell you liquidity is about to go up. In fact, President Xi said as much himself. They are going to pump the system full of money in China, and the rest of the world has to follow. The rest of the world is already doing it in a stealthy manner, but that's just the nature of the beast. Now, stock market last 7 days, it's been pretty ugly. Nvidia down 6%. The train that doesn't stop stopped. It's just shy of about $1,000 a share, which is bonkers. A year and a half ago it was about 160. Anyway, that's just how disruption works. Let me see. Google up 3%. Tesla down 3.9%. In fact, Tesla we will talk a bit about because they had a horrible quarter. But it's a horrible quarter because Q1 for vehicle sales is always terrible. BYD sales are down 40% in Q1. BYD, and guess who did better than BYD, only down about 11%, was Tesla. Let's look at some of the production numbers. Yes, the deliveries were weak, but there is an ace in the hole, and I'll talk about that in a minute too. But let's look at some of these numbers. You can see the production was 412,000 for the Model 3 and Y. Notice they do not have Cybertruck in there. Also, the total of the X and the S, another 21,000. What's crazy though is the deliveries were very low at 369,000 for those vehicles. So they made a lot of cars. In fact, I estimated about 420,000 cars. They made more. So there was actually a beat on the production, considering the disruption of the Red Sea and the arson attack in Berlin and everything else. So it is quite impressive that they got so many made. So they are still ramping, which is a good sign. But there's another good sign too, and that's probably why Tesla actually hasn't sold off as much as we expect, is they far outperformed BYD. That's one thing. But remember, all the production numbers, okay, call that 50,000 cars that are made, for some reason, just a theory, Tesla's not in a rush to sell them like they were at the year-end quarter. The year-end is very different. They had teams working till midnight every night. They had Elon writing emails, move these cars, sell these cars, da-da-da. This time they didn't care. I think it's for two reasons. One, 12.3.3 FSD, they are taking much more time to show the actual customers how it works. So that slows down the delivery. Tesla have no problem moving all these cars. Number two, and Tesla don't care about quarter-to-quarter earnings. They care about the big picture, and they care about doing things the right way. That's why I think they're not pushing all these cars out that are out there. But we also have a kind of ace in the hole, and that's hinted at here in terms of the deployed 4,053 megawatt hours of storage. I broke all that down, and I will put that in a detailed finance Substack later this afternoon. So you'll be able to see exactly how much that business is worth today as a stock if it was just a standalone company. And the answer will blow your mind. Now, switching gears to good news. By the way, in full disclosure, I did buy Tesla yesterday because I was afraid it was going to pop. It fell a little bit, another $4 or $5 from where, but that's okay. That's okay. I don't mind. And it might have more to drop as well over the coming week or two with earnings coming out. Now let's talk about this. Only 2 more OCTAs till the Bitcoin halving. 17 days. That's going to go real fast. Let's look at the whole crypto world. Since 24 weeks ago, actually, it's 24 weeks, I think, not 23. But market cap, $2.6 trillion. By the way, a week ago, it was $2.6 trillion. So the crypto market cap hasn't actually done anything in a week. It's been flat despite the volatility of Bitcoin. Probably kept alive by meme coins too. Active addresses, nearly 10 million active addresses in the last 24 hours and 67.5 million transactions in the past 24 hours. Way up from where we were 24 weeks ago. Now let's look at money flow. Yes, there was a lot of dumpage out of Grayscale last week, and that caused a lot of Bitcoin volatility. But overall, last week, digital asset investment products saw a recovery in sentiment, and the inflows were 862 million last week, almost fully recovering the prior week's record 931 of outflows, driven primarily by Grayscale. The recovery is coming back, ladies and gentlemen. Sometimes we have these little blips, And that's just the nature of the beast. Let's break down all the money flow by all the different assets. Ethereum had a rough week, saw a fourth week of outflows, another $19 million. And that's a common trait after upgrades like Denkun. And that shows you investor apprehension of their success. And we know people expected Denkun to change the world and make Ethereum great again. It didn't really do that, and hence it's down a little bit. Now, the other key things, you can see the Bitcoin 865 million in. Also, altcoins saw inflows totaling 18.3 million, with Solana leading the pack, up 6.1 million. Other notable flows were Filecoin, Polkadot, and Chainlink, with 3 million, 2.4 million, and 1.9 million respectively. So money is still coming in, despite what you may think about it being a weak market out there. Not bad at all. Fear and greed at 79, exactly the same level it was a week ago. Hasn't changed. The market divided by Bitcoin, a lot of red, but the overall crypto market cap is okay. So this really looks at the biggest names in crypto. That means the other names actually held up pretty strong, in the space of a week. And in dollar terms, well, this is slightly an hour or two old. Bitcoin is above 66K. But it's a little bit below that right now, but don't worry, it will rebound. But a lot of deep red with a couple of green spots as well. Tau, Jupiter, dark green, Maker, Litecoin, etc. Not doing too bad. Now, we'll talk a bit about the ETFs too. Not that I didn't this morning, but this is a new piece of news from the team at Glassnode, which I thought was very interesting. What it does, it shows you how the long-term holder supply has declined by nearly 900,000 Bitcoin since the peak of 14.91 million Bitcoin set in December 2023. And for the longest time, I was confused as to why would long-term holders sell before the halving? It didn't make sense. And I knew the reasons. My guess was long-term holders that have Bitcoin for like 5 years or more want to move it to a safer place. That is now the ETFs. They believe it's safer than their self-custody method. In addition, Grayscale dumping like crazy. A lot of the Grayscale coins were in there for a long time. So what you're seeing is the GBTC effect and the ETF effect of long-term holders moving to the ETFs. Taxes be damned. And here you can see about the short-term holder supply has increased as a result by 1.12 million. So a lot of FOMO is happening as well, which you covered this morning. And there's a lot of long-term holder distribution. Again, 300,000 of that Bitcoin distribution is from GBTC. And the rest is probably people moving to safety. Okay? A lot of people say, oh, the long-term holders are taking profit. No. The long-term holders know how Bitcoin works, and they know the most action happens post-halving, which you've proven time and time again. Sir Winston, thank you for coming. In addition, another bit of on-chain stuff here as well. This is the assessment of the long-term holders' realized price has also gone parabolic far earlier than usual. Cast your eye on the green line. Look how high it is. It's in the euphoria zone. Again, 3 weeks away from halving. The on-chain data is euphoric, but this time is different, and there's a lot more euphoria to come. That's all you need to know about that chart. Now let's talk about altcoins for a second. Score is at 49, which means slightly in the balance of the favor of Bitcoin. If we look at how Bitcoin is done, and this chart looks like nothing's doing well except for a thing called WIF, which is, I think, dog with a hat. Up a monstrous 4,461%. It's mind-blowing, but it makes everything else look bad. So, for example, Solana's on there, and over the last 90 days, I think Solana's up 85%. Bitcoin up 56.7% over the last 90 days. When people are crying, it's like, oh, it's down, it's doing so badly, but really it's not. But on the far right-hand side, Injective, down 5% for the last 90 days, but that was on a rampage. I've got to figure out what I do. I do have a little bit of Injective still. Optimism is there. Lido is there in red. Monero is in red, been in red for weeks. And Arbitrum is in red too. And Sui will probably join this crew in a couple of weeks. That's my forecast because of the dumpage that's coming. A lot of retail pressure. And the other thing is as well, and I've been stressing this too, and sorry for rambling all over the place, but I'm trying to build a tapestry in my head on the fly. We have this situation where a ton of new coins are being unleashed onto the market. Cool chart here from Dune Analytics, brought to you by The Block. And here, I thought this was fascinating to share. This is the share of new tokens appearing on DEXs and the chains that are behind them. What's stunning is 85.4% of all the new tokens are being released on two chains, Base and Solana. Two chains. If you add in Binance, the purple, you add in Binance, you get to 98% of all new tokens are happening on three chains. Now you're getting a situation where all the other chains are scratching their heads and saying, we want to be like those guys. And they're going to all try to jump in on the meme coin frenzy. But remember, being first is best. If you're not first, you're last. It might be hard to catch up with these guys because I don't see any Base or Solana slowdown in issuing new tokens as well. But there's other stuff happening too. And this all goes to the liquidity. When there's so much out there on the shelves, things can get diluted in terms of how much money can flow into something like Ethereum. When there's so much new shiny stuff like WIF that does 4,500% in 90 days, and that gets people's attention. Price gets people's attention. So let's look at this one. Wormhole. We have billions about to be unleashed in the month of April through a whole bunch of Solana releases. Big ones that were very, very long awaited. Wormhole is actually, I think it's being airdropped tomorrow, but also being listed on Binance tomorrow. And they have a whole bunch of trading pairs. They've got Wormhole to Bitcoin. By the way, the ticker for Wormhole is W. Wormhole to Tether. Wormhole to, what's TRY? I'm not even sure what that is. Anyway, that is coming. And a lot of people will be airdropped that. And when they get airdropped, a lot of people that get it for free will sell it. And then they buy the stuff. And again, it brings a lot of liquidity into crypto and brings all the prices up, which is fascinating. The current price of Wormhole is approximately 1.58. You can see it on Whales Market as well. And I do believe what will happen is the price will fall because the airdrops cause a lot of sell pressure. So I expect to maybe get Wormhole under $1 real soon. We'll see. Sometimes when something is released on Binance, it can pump it a little bit too. So it might be that counterbalance of airdroppers selling and then a new listing on Binance. But I'll be watching this one carefully. Next as well, Zeus, which is kind of like a integration site blockchain that has Bitcoin as a settlement layer with Solana running on top. They are airdropping tomorrow, and you can check your airdrop allocation, but go to the official site only. I will add the link below later. Be careful as well. People want you to connect your wallets to things that are fake. Don't do that. Do a lot of research before you ever connect your wallet to anything. Think of that as a big pipe that can suck everything that you have in your wallet out. Okay? So many people who are new to crypto get excited. Oh, airdrop. How do I find it? Click on something, connect the wallet, boom, lose all they have. Be careful, everybody. Be real careful. Let's look at Bitcoin Nasdaq correlation. I will talk a bit about correlations because they're so important. Bitcoin up again 52.12% over the last 90 days. QQQ up 8.8%. So no correlation there. And that's what we like to see. Let's talk about gold. You've got Peter Schiff dancing on graves of Bitcoin. It's shocking. He's so excited. Gold made a new all-time high. All right. I think Bitcoin made 5 new all-time highs in the last 6 weeks. Anyhow, not going to talk about that. But what Peter Schiff fails to understand, okay, is this correlations between Bitcoin and all other assets, including gold. Guess which one's the worst correlated? Let's check this out. So here, again, the gold bugs are so excited. By the way, pull up a chart of gold divided by M2 money supply. You can go back 50 years, 40 years, 30 years, 20 years, 10 years, 5 years, whatever you want. It's not a winning asset, okay? It might be good if we go back to caveman days when we have nothing else, but not right now. Now, if you look at Bitcoin, you can see it is far more correlated with risk-sensitive assets, things like the Magnificent Seven. The higher it is to 1, the more correlated it is. But over the last 3 years, Bitcoin has exactly a 0.63 correlation with the Mag 7, and the correlation between Bitcoin and Nasdaq is 0.58. That's why I show it every single week. Between Bitcoin and the S&P 500 is 0.54. So basically what that says is Bitcoin is more correlated to the Nasdaq than the S&P 500, but it's even more correlated to the Mag 7, which are high risk assets. And correlation between Bitcoin and gold is extremely low at 0.23. Okay? So when you have Peter Schiff getting excited that Bitcoin goes down and gold is up, it's rare he gets to celebrate. So let him have his day in the sun. Bitcoin, good morning to everybody in Asia and Australia, New Zealand and China. And some people up in the Middle East still as well. And everybody in the US, have a nice evening, late afternoon. And I'll see you all tomorrow morning for the Bitcoin Daily. Thank you, everybody. Good night.